Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your end of day recap for Tuesday, May 4th. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. The video is for education purposes only. If the video looks blurry, YouTube takes a long time rendering, so just give it a little bit more time, and you could reopen the video and it should be fine. You could also see this screen print on my Twitter feed as well. So what kind of data we get today? A little bit of everything, I would say today. Let's kind of start with how the day started. Not too much of a move in the overnight session, and then things kind of started to kind of pick up to the downside around, what time was that? Around 8 o'clock this morning. About 7:30. There wasn't really a specific headline. I tweeted something out about how there was a plane that was flown into Taiwan airspace. But really, that's been going on for a while, and a lot of people on Twitter were adamant correcting me, which is absolutely fine. I really think, and there was also comments from Janet Yellen, which kind of spooked the market a little bit too. But I really think that the market was kind of looking for an excuse to kind of move down a little bit. As I mentioned in yesterday's video, the market it has looked tired for the last couple weeks, and it just looked like that it was looking for a reason to kind of push lower. And sometimes I know people always like to look, say what caused this? What was the reason for the move down? And I think really that's it. The market goes where it wants to go. And the last couple weeks, it could not rally. We basically saw this and we went through in yesterday's review of the S&P that we got rejected here at top of value. So and then we just started to go lower. But again, people never seem to ask when the market goes up, why is the market going up? But whenever there's a little bit of downside movement, what was the reason for that? And I say this in a lot of these videos, and I talk a lot about it in the trading room, but you just have to be comfortable that the market goes up sometimes and the market goes down sometimes too. Over time, it should, I believe anyway, I'm a long-term bull, that it does go higher over time, all things being equal. But it's going to go back and forth, some periods. And you just have to be comfortable with that. There's too many traders, I think, are always looking for the why. What did it? What caused it? And then they try to anticipate the next thing. And I just think that if you've been doing this for a while, you get a little bit more comfortable and you make adjustments along the way. So what are those adjustments? Well, taking some trades off, moving a little bit more into cash, being objective with the market, kind of reading the signs a little bit that's telling you that the market has been struggling for the last couple weeks. The overall indices just could not really get higher, and they were kind of overbought for a while too. So you could see, and I forgot to tweet out this second look, but when we were kind of in here and failed to kind of get back above here, and then started to move down, once we broke value for the day, I mentioned that there was one VPOC there, and honestly, I don't know if it's a logical place for us to bounce, but we actually went down and took the next one down, which is here, which I did not put on Twitter, so people are thinking, hey, you got it wrong. But that was the first step, and then the second step, which we did call out in the room when we were in here, saying, hey, the next step down is 41.23, and we reversed off of that. Now, did we power all the way back in the S&P? No, but I do think a couple takeaways from looking at this price action in the S&P is that, number one, we did hold the 20-day moving average too, which people look at a lot, which is this line on my chart, and we're in value for the month. So it could be kind of one of these months where we kind of fight for a direction a little bit back and forth and jostle around a little bit. And I think you just kind of have to be patient and look for those signs of what areas of the market are super strong versus what areas of the market are really showing that relative weakness, right? And the other thing that I've been saying too is it's good if you're kind of like I said, a little bit more experience of a trader, you actually welcome some volatility. I typically don't want to see huge volatility and like a 15% correction, but a 5% correction, I think it just really shakes things up. Right? It tells people, hey, you got a little bit of a dip to buy. Things are getting to be a little bit more attractive. When we just grind higher like we did for the last 2 weeks, it's kind of painful, to sit and trade when there's just not a lot of things that have that volatility to the downside and to the upside, right? Volatility works in both directions. So one thing that I did notice too, we'll get to the Qs. And then we'll get to the sector performance and talk about relative strength. But the diamonds, right? And we talked about how the diamonds, I talked about them yesterday. I talked about them in the weekend video that the Dow just looks a bit stronger. We did again explore some lower levels here, but the Dow looks really strong. And I've toyed around with putting on a Dow trade here, but I got enough things in the works right now, and I think it also is a little bit difficult trying to hold some positions right now because I did think that we were going to get some volatility at some point. I'm never one of those people who are going to predict the exact day where we're going to get the volatility, but it just seemed like it was coming. So you want to kind of try to be highly selective, and just because a chart looks good, which I think the Dow chart does look pretty decent, sometimes you got to exercise a little bit of discipline and say, hey, wait a minute, it might be, you might want to wait a little bit and wait for some confirmation. We'll come back to that point in just a minute. The Qs, clearly are showing, some relative weakness. They did come back from the lows, down 1.8%, and we're kind of coming into the 50-day moving average. Someone asked me in the trading room, well, where would be the next level of support? Because we did break through the May value area, so we are trading under, below value. But I think the 50-day moving average is something that to watch, because if we don't hold the 50-day moving average, there's not a lot of other support right close by. There's S1, which is an extension away from the value area, and then you have a version point of control all the way down here at 316. So let's just take it one day at a time and kind of see if this market fights back a little bit in terms of the growth areas of the market, or if they just kind of sit in here for a little bit. We also have a lot of other earnings reports this week. It's kind of those second tier names, right? You get the PayPal, the Square, you got Zillow reported today after the close, Match reported, ATVI. So a lot of those other, not necessarily the biggest weights in the indices, but they're still kind of important. HubSpot is one name that I'm watching. I did put on an earnings trade for Zillow. We'll see. I don't know. I don't think until tomorrow I'm going to know how that's going to play out. But I'm long the 125, 130 call spread. And I just like, one of the things that I always notice, which gives me a little bit of edge on earnings, it's, earnings trades have been very difficult. But look at the history of Zillow, right? So I'm always paying attention to this column, right? What the percentage changes. Forget about the numbers. I'm interested in the numbers too, but what I'm really interested in is how the price, how the stock reacts after the name reports earnings. So I do look at things like the reaction, right? How well it does afterwards. So yeah, I'm long the 125, 130 call spread. Here I would be in the money on it because it didn't cost that much. I went a little bit out of the money, just thinking that Zillow could potentially move decently for that name. So let's go back to the spreadsheet here and talk about where there was this performance. And I didn't go over the performance of the indices, but yeah, SPY only finished down 60 basis points. Really not that big of a deal. The Dow finished in the green. Small caps finished down 1.1%. The bonds rallied a little bit, up 70 basis points, and the VIX was up 6% for the day. It hit a high of 2185 around 12 o'clock, and then we saw the VIX kind of decline thereafter. So best performing groups, these steel names have been absolutely on fire. I mean, incredible. I've been long this STLD, which has worked really well. I've hit multiple targets in this trade since this nice breakout. But I'll tell you, you had it. They really made it a little bit complicated for some of these breakouts because the breakouts were, happened right around earnings, and you kind of had to sit through and then pay attention. Case in point, Nucor. Right, Nucor went down on earnings. Right, really nice tight consolidation in an uptrend. Right, had this day on earnings and that little shakeout day, and look at it since then. Today was the biggest day since it reported earnings, but it certainly went from 78 to 89. Right, and again, if you look at the option prices, it still boggles my mind a little bit when I don't see as many traders get involved in something like this versus, super high growth tech, because the options are cheaper. Right? I know that there's a lot of retail traders that like to trade options, but why not go to where I always like to see areas of the market where the options are a bit cheaper, and then to see momentum in those groups rather than the high growth, high tech areas of the market. Those options are expensive generally, but something like a Nucor, the options are not crazy expensive. So it's just a little bit easier. And then if you go through the rest of this group, U.S. Steel got going today. CLF, which we noted in the trading room, I thought looked pretty darn good too. This thing closed on the highs up 11.8%. I didn't really want to continue to add a lot of add a ton of names in steel, considering I already had exposure. But I mean, very strong, and this metals and mining group, which has a lot of different subgroups in it, right? It is metals and mining, but look at the breakout in this thing. This is also a member of the TTG Trend Portfolio, right? So we've been long XME for a couple months now. That trade has worked quite nice. Other sectors that performed well, of course, there is a steel ETF, that's SLX, was up 2%. The banks were strong today. I've been along this Key Bank for a while, right? This Key Bank is breaking out, right? JP Morgan also looks kind of interesting here. I've talked about JP Morgan a few times now. It really hasn't gotten going. Wells Fargo has been strong. Right, I'm just waiting for Thinkorswim to adjust. If you look at the KRE, right? KRE made this huge move back here, and it's kind of been going sideways. So, if you don't want to pick individual names, this is an equally weighted ETF, so it does move, right? I talked about, I think, Regions Financial the other day. That has been strong and looks pretty good, but yeah, a lot of strength in the financials, right? So that group did well. How about these materials, right? We've talked yesterday about the chemical companies. I did go long Dow Chemical today. We got the breakout on this one today. I'm a little bit greedy in this one, so I did not hit the first target yet. I'm kind of holding back in that. How about DuPont? DuPont hasn't done anything for what, a couple months now. And took it earnings, had to wait till earnings, and it actually started the day lower. Note you have a VPOC up here, 80.40, which is where I think it could get to. I talked about DuPont on Bloomberg about a month ago, and it really did nothing, but now maybe it gets going. If you look at names like Archer Daniels since earnings, this name's been on fire. Bunge reported. This name was up today, 1.4%. Didn't close on the highs, but this chemical space really strong. Trox is another one. How did OLN finish for the day? Up 2%. So the more that, and I've talked about this now for months, the more that you could get out and be objective and get out of your, if you're 100% growth person. Maybe changing pace a little bit and looking at some of these, pretend some of these chemical companies are high growth names, because look at the trend, look at the momentum. Some of these things have been absolutely on fire, right? And there's been some really nice trading opportunities outside of that. So, if you're stuck in high growth, I get it, I understand, but that's one of the things that you learn as a trader and as an investor, that and one of the advantages of a retail investor is you're really not pegged into a small group, right? There's been so much other strength in other places of this market. It's been kind of, besides the overall market going sideways the last couple of weeks, it's been a fun market to trade, right? How about the industrials, right? Well, Deere's another one that looks like it's, I commented this one, I put this chart on Twitter earlier, but let's see if Deere can break 382, right? I traded URI yesterday and I kind of chickened out. Like I said, I just felt like there might have been a pullback coming, so I was kind of quick getting out of some names. But this URI is setting up too. United Rentals, right? Sideways action. And then if you look at names like SHW was up, I mean, look at this thing. It's up 2%. So again, there's plenty of names, right? And this is just a handful of names that we're going through. But, it's tough. Some of these names are high priced and the options are wide. But, Honeywell's another name that I think is setting up. Right? And I've talked about Honeywell a couple times this week. Some of them you just kind of have to wait. But I like the little earnings, or sorry, not earnings, but I like this little gap almost being filled. And you got support, right? We talked about this one pre-market, right? So you got support at 221, and maybe this thing can get up to 230, right? And if you look at the 1 hour chart, 229, 230 would be, I think, a great little trade. All right. Some things to, I added to some things. I tried, and by the way, like, I don't want to completely ignore high growth and tech. Remember a couple weeks ago, I was really paying attention to that group and was able to take advantage when that group bounced a couple weeks ago. But again, I didn't let watch the paint dry. I got out of those things pretty quickly. I was in SE. Was one name. I was in Autodesk, and I did not stay very long in that group. But it's gonna. I think it's gonna set up again. And it just takes a lot of monitoring, setting alerts, and just watching names that you're really interested in. And if they don't trigger, they don't trigger. I tried trading a little bit of Nvidia today too. That's one of my favorite dip buys. To tell you the truth, I didn't have the patience for it. I saw better opportunities, but this thing came all the way back to 578. So I tried. I just saw that there was a bunch of downside things. When I say things, version point of controls, right? So the first one that I tried, I think, was this 565, and then we went, we got to it and then we bounced a little bit from it. And then once we came back and took it out, I began to kind of look at the 5 minute chart and said, okay, there's also a couple of VPOCs. There was one here that we just glided through, and then there was a second one. And sometimes these things go a little bit further before they correct, but this thing ended up at 578. So yeah, I tried it again once the second VPOC was gone, but where did I took this off for a small gainer, and I just thought there was better opportunities. I just didn't want it being I just didn't want to focus on this thing, the whole day. So that's that. Let's just take a look at the chart for more of a swing trade, and that was going to be a day trade the whole time. But yeah, I mean, it's into the 50-day moving average, and I think this group, right? Speaking of tech and growth, I would be paying attention to what happens in these semiconductors, right? That's one area where the semiconductors are not super expensive. It is concerning for this group to break below the 50-day moving average. So names that I'm watching in the next couple days, because I think that would be a really good sign for the market, is to see the semiconductors being bought into weakness. So applied materials into the 50-day moving average. This has been a tough one because it made its high 146. I had actually tried, I was looking for the turn in here. I got stopped out in one trade. I tried it again. I got some, little bit of gain on one trade, and then I bailed on it. and it's actually went lower than this, and we'll see what it does here at the 50-day moving average. I have nothing on now in this name, but I'm watching, and I'm watching names like ASML. They look very similar. That's got support of 618. It's been such a strong name and it's been a great name to buy on dips. And then Lam Research is another name too that's into the 50-day moving average, but below value. So I think this will be kind of, even if you don't have a lot of exposure and into semis, or even if you don't want, big exposure in the semis, I think they're an excellent group to watch for kind of a signal for the overall market. Because if this group rallies, I think the market is in a good, is in a better spot. If they continue to break down, then I would be a little bit more cautious, right? So again, letting things play out. Notice that I'm not making predictions, right? I'm saying, hey, these are the things that I'm going to watch, and these are a couple of the names that I'm going to watch, and then in the trading room we'll define some more levels to watch in some of those semiconductors to by chance participate in some of them, but. One other group to talk about too with relative strength is the defense names, right? Meaning the aerospace. So I mentioned Honeywell, which is kind of in there too, but Raytheon, it's been a slow mover, but it's breaking out. But I like this LHX too. This LHX has not done too much, so I just kind of bit the bullet and said, you know what, the setup looks good. I'm defining my risk. 218, 219 is one target, and then 222. So look at this is probably going to be a short-term swing trade, but I like the strength in here. Nice volume on this bar too after earnings. Again, a lot of these names, they're waiting a little bit till earnings and then they're going, right? Again, not so much in tech, right? Tech's had some issues with earnings, but the industrials, the materials, the aerospace names are having some good reactions off of earnings. All right, and then to talk about the underperformers for the day, biotech, which is a bit concerning. Right, I've seen this ratio a couple times out today, which I have a chart for this too. Which is XLV versus XBI. It's kind of like another risk-on type gauge. Now I have XLV in the numerator, and I've got XBI in the denominator. And yeah, I mean, this is kind of shows you that value. XLV is a bit more value. XBI is an equally weighted biotech, so small caps get the same weight as the large caps. And this thing, biotech is struggling right now. It bounced last week, with the rest of the growth areas, but it stalled. It stalled right at the 50-day moving average. Surprise, surprise, right into resistance. It stalled. All right, being a little bit sarcastic with that surprise, surprise. But hey, if you've been a disciplined trader in this market, you're faring better. Because really, these things are not. I mean, this is not a overwhelming, like, again, to be sarcastic here, but it should not be a surprise, right? 50-day moving average is resistance, right? And on the other side, it acts as support. So this thing stalled right at the 50-day moving average, right where it needed to turn the corner. Again, so if you're paying attention and if you're being disciplined, um, you know, it's not that it's not a surprise, right? And you could trade around that. Chinese internet's down. Clean energy names, the solar names have gotten absolutely smacked around. Talk about a group that got overcrowded over the last couple months. Clean energy, solar stocks, definitely, along with your software areas of the market. So again, the word that really came to mind over the last couple months and still is a bit overcrowded, right? And there's a lot of stubborn traders out there who, you hear about the diamond hands and all these things, which are if you're a trader, right, not a long-term investor, some of these things, and I tweeted this out earlier about, all these things for a trader. right? And I got some pushback on this, which I expected, right? Here's the things that I tweeted out, right? That really, again, I'll say one more time, it depends on your time frame. Because somebody said, hey, well, buying the dip over the last 10 years has worked really well. No doubt. But a lot of people aren't trading on a 10-year time frame. They're trading, they're looking at their P&L every day, and they're traders, right? There's a lot of people doing this now full time, or a good portion of their time. So you have to have some of these things, like, so I've seen this on Twitter. It's horrible when people say this kind of stuff. Oh, this stock is cheap, look where it was last month. That doesn't matter. That doesn't matter where it was. You need to figure out where it's going in the future, right? Or it's trading at a discount. Again, horrible. Horrible from a trading standpoint. I'm going to average down, right? What is Paul Tudor Jones used to have in his office, right? He had a big sign that says "Losers average losers." Um, you know, so that's a big thing, and I don't really want to debate that in this particular video, but you know you got to be a disciplined trader. And of course, the diamond hand's probably the worst thing ever that I've ever seen come out in trading, because this market, and as I've given many examples, the more disciplined you are, the better, right? So, what my game is, right, and why this stuff is important to me is because I'm trying to generate, be profitable over the year, month to month, right? That's my game, right? And last month was a good month for me. Was it an awesome month? No, I wouldn't say last month was an awesome month, but I try to really take what the market gave me and be a disciplined trader. Again, I'm going to have mistakes here and there, because everybody's human. Everybody's going to make mistakes. So anyway, I'll just kind of wrap this up, and we'll talk about one other name that saw call activity, which I thought was a pretty good opportunity. I've traded this name before. It is a utility, but it's into the 200-day moving average. Big, nice size call buyer out in August. So nice swing trade there, and I stuck that trade on at the end of the day. All right, guys, that's it for today's video. If any questions, as always, you can either hit me on Twitter or email me. And thanks for watching the video, guys. Have a great night.